and welcome to Money Matters. My name is Richard Whitfield, and I'll be your host for the show today. And our co-host is Pat Welde from Merrill Lynch. And we have two guests this evening, and they are Richard Natow and Robert Cohen of the Prestige Group. And we'll be talking with them in a few minutes about commercial real estate. And you'll learn a lot about that this evening, so stay with us. But first, Patrick, nice to see you again, and good to have you.
Good to be with you, Richard.
Thank you, sir. And I have a question for you. What the heck is going on with this oil business? Where are we?
Yeah, it's creating a lot of uncertainty. I mean, oil is dropping precipitously.
That's a good word. Thank you.
Oil's down under $80 a barrel now. There's some good news and bad news in that. I mean, the good news to many of our viewers, you know, the average driver, with the cost of oil where it is today, they see it at the gas station, you know, will save them in excess of $1,000 a year. So it's meaningful. And, you know, we think, quite frankly, that $1,000 in savings, people will do what people do, they'll spend it. So that could be a good thing, quite frankly. The problem is we really don't yet know with much certainty why oil is dropping. And it's important. I mean, if oil is dropping because people are forecasting, predicting that there's going to be a severe economic slowdown, that would not be good. We don't know that yet. It could, quite frankly, a lot of it could just be technical. You know, the traders moving the price of oil around, and once it hits certain levels, it drives it lower from technical basis. If that's the case, I'd say it'd be good news. Okay,
does this affect any other market, like the bond market or any other situation?
Yeah, not so much the bond market, although I would tell you, when oil first broke $85 just weeks ago, and it literally, I mean, in 15 minutes, it dropped from 85 to 81. That's part of that technical part I was talking about. When that occurred, it created a lot of havoc in the market, all markets, including bonds. And the 30-year Treasury bond, which is, and I'll say this, it may not mean a lot to people, but it was crazy where the 30-year Treasury bond, you know, dropped 0.5% in 15 minutes. Now, it bounced off of that level, but it caused, you know, a lot of fear as far as rates were, you know, oil was dropping because of that slowdown, which, again, we don't know that, but somebody guessed that. And there was a flight to quality, and there was a lot of money that was in the government bonds, which drove rates a lot lower.
Okay, well, what do you think about this market in general? Is it an expensive market, or what would you call it at the present time?
I still think there's terrific opportunities in the market. I'm not going to tell you the market's cheap. It's not. The stock market, that is. It was cheap 4 years ago, 3 years ago, 2 years ago. So some people take what I just said, it's not cheap, and they say, well, then it's expensive. And it's not. It's not expensive. You know, that's measurable. And the S&P 500 now is trading at about 17 times earnings, current earnings. That's not cheap, but historically that's not expensive, number one. Number two, that's all relative to what your competition for money is. And the fact that interest rates are at lifetime lows, the PE should be higher. So I would argue the market is not expensive, and before this cycle is over, which it's not, it'll get expensive. And you'll be able to see it for that. We're not there yet. I still think there's plenty of money to be made in the stock market.
So we could say that you're positive about the market then?
I'm quite optimistic, especially relative to what else you can do. I'm more concerned about the bond market. Because bonds will move in opposite direction of interest rates. And I don't know when, I don't have that crystal ball, when rates will rise, but they will at some point. And when rates rise, a lot of these investors that have plowed hundreds of millions of dollars into these bond mutual funds, they're going to have a day of reckoning. They're going to lose money in an asset class that most of them aren't even aware they can lose money, because rates have dropped, you know, for the last 30 years, quite frankly. That day is nearing.
Reckoning's coming.
So I like stocks relative to what else I can purchase.
Okay, good. Now, do you recommend any particular sectors at this time that would be maybe a good place to look for our investors out there?
Well, I would say it's a good place to start. I'll give you our firm's two favorite sectors right now. Our two favorite sectors are healthcare and technology, both of which are growth industries. Now, they've performed well, but we think they're going to continue to perform well. So there's some terrific ideas in those spaces as far as sectors. But the other sector, we mentioned oil prices dropping as much as it did. Well, oil stocks have gotten beat up badly. I mean, there's some terrific, big, solid oil companies, energy companies, natural gas companies that are down 25 to 35% in the last 3 months. Now, some of them, there might be a reason for it, but if you have good research and have an analyst that's good at following the industry, now might be a time to take a look at some energy plays.
All right, good point. And the energy stocks have some good dividends for the most part. I mean, there's a dividend play there.
Definitely, many, especially some of the large integrated oil companies, they do. You also may be referring to it. I know some of your other guests have talked about the master limited partnership space, MLPs, where you can buy companies that have thousands and thousands of miles of pipe in the ground, and they're like toll collectors. They charge people money to push stuff through their pipe, whether it's liquid natural gas or oil or whatever. And a lot of these companies pay terrific dividends, 5, 6, some of them are yielding 7%, and we think the dividend income is safe and quite frankly can grow. So there's also an area that you may want to look at for some opportunities. All
right, good point. Now, you talked about, the interest rates being low, and we have a question from a viewer. So
sure.
Are you ready for that?
I am.
There's David Law in Philadelphia, and I'm interested in that being on the Philly cam, we're getting more questions from Philadelphia. So
Terrific.
that's interesting.
Good. Welcome, Philly.
Yeah. And here's his question. If interest rates go up, where is a good place to invest for the long term?
Well, that could be an hour show in itself, but a simple answer to that would be, if interest rates rise, then on the safe or the fixed part of someone's portfolio, when you're doing your asset allocation, this is how much I want to have in stocks, this is how much I want to have in bonds or safe investments. As rates rise, that side becomes more attractive. So, a real simple equation would be, now rates are low, so the bonds are not a good alternative. But if I can buy good quality, safe bonds and get 4%, let's just use a round number, if rates rise to that level, and I can take half my money at 4%, and then put the other half, now only half in the stock market, and make an assumed average return of 8%, now my overall portfolio is earning 6% with only half my money in the stock market. So, you want to have some money available that if and when rates rise, you're able to take advantage of that.
Okay, good. So have a little cash available.
Cash or in your bond portfolio, keep your maturity shorter and ladder your maturity. So you always have money coming due so that if rates are higher, you get to reinvest at the higher rates.
Okay, good. Good answer. Now, if you have a question, feel free to send it in to us, and here's how to
you
send
can have
your
your questions answered on Money Matters. Please go to our website, money-matterstv.com. On our homepage, click on the banner on the right that says, Send us your questions. While you're on our website, you can find information about our hosts and guests, as well as show notes and links about this show and past shows. Money Matters is also available as a podcast on iTunes and Stitcher, so you can listen to Money Matters while you're on the go. That website address, again, is money, M-O-N-E-Y, -matters, M-A-T-T-E-R-S, TV.com.
Okay, well, for the rest of the show, we're going to be talking with Bob and Richard and Bob about the commercial real estate business, and they're from the Prestige Group. And Richard, tell us about the Prestige Group and how's business going?
Sure, thanks. Prestige Group, I started the company about 30 years ago, and we are commercial. Our focus is commercial and industrial and investment real estate. And there's also a lot of other fields of real estate, but those are the three that we focus on. We're boutique operations, one office. We're independently owned. We're not part of a franchise. And for me, it's pretty cool because a lot of the other companies have merged or become franchised. We're still an independent boutique operation, and we're able to move with the market in a timely situation. If somebody calls us and says they want to buy something, sell something, we can be on it in overnight. We maintain a lot of database information, which makes our search for properties easy for us to do and productive for our clients.
For somebody that's watching, our program tonight, how would you advise somebody to get into the real estate business?
It's a big question.
Sure.
If you're in a restaurant or a diner or someplace and you're sitting there, you overhear people talking about real estate, whether they rent a property, lease a property, looking to buy a property. Yep. So there's a lot of different aspects of real estate. If we're talking about somebody wanting to invest in the real estate for investment purposes only, then they could buy a shopping center, they could buy an apartment building, they could buy a warehouse and lease it out. They could also buy their own office building that they might want to occupy. All of those revolve around money. So they need to have some money to get into a real estate investment deal. And a lot of times that's structured with a friend, a relative, or themselves to pool some money together. They also need some pretty decent credit in today's market to be able to go to a bank and borrow money. Their goals in investing in real estate, they need to really have a business plan up front that can be discussed with us or with our consulting firm, where we'd want them to identify long-term investment, short-term investment. Do you want a fixer-up house or a fixer-up building, or do you want something that is already established with good quality cash flow? So there's a big difference there, and the numbers in the deals seem to bear that out. Right. Handyman special certainly is at the bottom as far as cost, but if people are handy, they're able to make improvements, value add opportunity, and increase the value of the real estate that they would be buying. They also want to be concerned about the location of what they're buying. If they're hands-on management, they're going to want something that's probably within an hour of where they reside or where they work. You don't want to be driving 3 hours when you have a leaky sink or a pipe or something like that. You want something that's close by if you're just going to be a small local investor. We also, from an investment standpoint, recommend that they have a due diligence period included in their agreement of sale that they'll be buying. In the due diligence period, they would investigate the zoning on the property, do a building inspection, roof inspection, a lot of due diligence information, books and records, the lease abstract. So there's just a few things that need to be explored before they make a final commitment and go to closing on a property. They really need to know and get inside and sort of live the deal that they're looking at doing. Income and expense statements, those are really important because they're going to need to pay their mortgage.
Sure.
So they need some income from the rental side of the business. Even if they're going to occupy it for their own use, they still need to have an allocation of dollars to pay themselves rent and then pay the mortgage on that property. So there's a lot of entanglement there. Parts. And for somebody just getting into it, they really ought to go cautiously, and they can work with our company. We have the consulting division, which Bob runs, so we can really get down and dirty with them and either help find a property if they know what they're doing. If they don't, we would suggest that they talk to Bob about what the parameters would be for their purchase.
All right. Well, you've talked a little bit about the real estate consulting business. Could you tell us a little more about that?
Yeah. Bob Cohen runs the consulting division for Prestige Group, and in that division, Bob works on financing properties, getting people mortgages, also educating them about the due diligence process. We can do it, but we'd like to have the people be involved to do it themselves along with us, so that if we get ownership records and cash flow records from a previous owner or current owner, we can analyze those, and we would also instruct or assist that potential buyer with what we're doing and how we're doing it, so that they get to learn that part of the business themselves. They don't have to have a real estate license, they can just be an investor, but the consulting part lets us spread our knowledge of the real estate business and how that works.
Bob, how does the consulting division, since that's your area of expertise within the company, how does it help real clients, your clients?
Well, one of the things that we want to do immediately is to build wealth for our clients. And in order to do that, we educate them. Of course, we work for a fee-based service, but we try to get, to piggyback on what Richard said, we try to get and make the best decisions for our client depending upon what their investment goals and objectives are. We kind of act as their real estate department. Our areas of expertise in that world that we focus on is either portfolio evaluation, investment analysis, property management, land development, or structuring financing, as we talked about. Our clients generally, which is a very interesting aspect of investing in real estate, they either don't have the time, the inclination, the manpower, the knowledge,
Sure.
to do a specific task. They might be a large company that don't have a lot of people but are so busy on so many different tasks that they just don't have the time to do certain priorities that they would like to do but can't get to. So they hire us for that. Some owners, on the other hand, are not real estate professionals. So we come in and we analyze what we need to do, whether it's the profit and loss statement, whether it's renovations to the building, to ultimately try to increase the value of the piece of real estate that we're looking to analyze. We were recently hired by a client that inherited an apartment building. He had no idea what was going on with the apartment building, so he brings us in to see whether or not the rents were low, rents were high, whether he was in the market or not in the market as far as stability is concerned. He had some vacancy problems. The place was a little run down, deferred maintenance. So we came in, we were hired, and we came in and within about 6 months we incorporated a renovation program which allowed us to raise rents, rid ourselves of some of the tenants that were undesirable. And before we knew it, within 6 months, he was asking us to be his management team because we'd raised rents 45% from when we started.
Mm-hmm. Bob, what about property management, now that you mentioned that, with the Prestige Group? How does that work?
Well, again, to continue in that vein, what we generally do, and depending upon the needs of a client, we would come in and look at the rent collections, see how they're going, mm-hmm. Take over the rent collections or accounting or evictions or maintenance, or see if there's any kind of renovations that might be needed to be done. Some landlords like to do certain things and give us the rest. Other landlords would rather have us do the whole thing and then they just oversee. We let them go, and if they're not professionals in the real estate business, we let them go into their own business and do what they do best and let us handle the management side.
Mm-hmm. Do you have your own team that does the fixing up, or do you
we hire a lot of contractors and subs, and
okay.
We have a vast array of different contractors that we've used in the past that are always there at our beck and call.
Mm-hmm. Okay,
if
good.
a client hires you to do an investment analysis, you may have touched on some of this, but what does that consist of? What are they going to get back from in the form of an investment analysis?
First of all, we want to make sure that when we do an analysis, we're meeting our clients' investment goals. That's number one. So either you're going to include a market study, a feasibility study, a location analysis, a financial analysis where you're going over the income and expenses, and where you might have a lease review of a shopping center. You need to review some leases to make sure we know on one piece of paper what everything's going on with those leases. We were recently hired by a landowner who owned a big piece of ground, about 15 acres in one of the Chester County areas. He wanted to know if it was a good area to build a shopping center. Now what we found out, so we were hired to do a market study. Mm-hmm. What we found out was that the good news was there was no competition within a 5-mile radius. The bad news was there was nothing in a 5-mile
Nobody
radius.
lived there. Yeah.
There were no commercial buildings in a 5-mile radius. It was a scattered barn here, scattered
right.
farm there. So unfortunately, when we had to tell this client to save him millions of dollars in fit-out costs, that number one, he's not going to get the tenants to come. He's a little bit early to the party, and that he should wait a few years and let the market come to him, because 5 miles away there was a beautiful retail environment, but nothing in between. So we felt at that point in time that our recommendation was hold the court.
Sit tight.
Yeah, sit tight.
Mm-hmm. Richard, what about land development with your company? You're experts in that area also?
Yes, that was the basis of the company when we started 30 years ago. Mm-hmm. We were representing some of the major builders in the Philadelphia area, and the business started to transition so that builders 30 years ago they would buy the land, they would subdivide the land, they would put the improvements in, and they would build the houses and sell them. And there's a lot of time and money invested in that process. So what we found was that there was going to be a diversion, that builders wanted to be builders. They didn't want to deal with the approval process as far as working with the townships, the zoning, the attorneys. So we focused our company in 2 areas. One would be the marketing of new homes for builders, and the other side would be doing helping us with the subdivision process. And I've worn all the different hats, broker, landowner, builder, developer, and consultant. So I'm immersed in that whole thing from day one, and it's easy for me to really work with an owner, a landowner, and help them through that process. You really need to know, which architects you want to use, which engineers, which zoning lawyers. So a lot of that is sort of inherent to what I've been doing for 30 years, and it's hard to just throw it out there and just pass that on to somebody. But we do that internally. We help them with that, and we make the process as seamless as possible. The townships, every township is different. People will say to me, I have 1 acre of ground, what can I do with it?
Where is it?
Where is it? Let's go look at the zoning books, because like an R1 would be one thing in one township, and R1 would be something totally different in another township. And the city, I mean, these have, they could have 30, 40, 100 different zoning classifications that you have to deal with. So it really depends where is that property situated within the township or the city. Then we find out the zoning, also the availability of public water, public sewer, gas, electric. All of those make the job easier to do if you have those 4 ingredients. If you don't have public water, if you don't have public sewer, the whole scenario changes. It's a different world, because now you're dealing with septic systems and wells, some possible environmental issues. It just goes on and on, the things that you can run into.
Bob, you mentioned that one of the areas at the company that you help people with is financing. I mean, that's obviously a critical element. I mean, other things are really, really important, but the financing is what lights the fire. So how do you help with financing?
That's a very good question. A major part of our consulting division is helping clients find commercial money.
Yeah.
The interesting part of that is it's a very time-consuming and onerous task. It's very different than the residential world, although residential today is still very difficult to get money. Sure. The commercial side of it is there's far more issues when it comes to financing of a commercial piece of real estate when you're talking about multi-million-dollar properties. We understand the banking language. Bankers today really want to deal with professionals. They don't like to waste their time. Right. So you need to know the language, which we have for last 35 years I've been dealing with lenders. When we have a client, we generally first look at the income and expenses of the property they're looking to finance. If it's a stabilized income producing asset, we figure out what's the maximum loan amount that they can borrow. We have about 50 banking solid relationships where I'm talking with bankers all day long.
Right.
So that makes it a lot easier for the client to not have to be dealing with the process, as I should say, right, of going towards talking to these lenders on a regular basis. We wind up taking if the lender decides he wants to go ahead with the process, it's not just you get a commitment and you're done like a residential piece of real estate. You get a term sheet, you have to negotiate a term sheet with all the different terms, the nuances involved with a deal. Then once you sign the term sheet and you pay a fee, then you wait a while, you have to give them a lot more information, and then you basically wind up getting a commitment. You wind up needing appraisals, environmental. So in essence, the overall theme is we take the worry out of being close. We basically handle all of the aspects of the financing for the client, right, and we make a very difficult task much easier.
Okay, I have probably a final question for Richard here. Dealing with your brokerage and the consulting business, do they work together at Prestige Group, or are they separate entities?
Well, they work both ways. They do work separately, and when necessary, they work together. A lot of times, like Bob mentioned before, there was people that had an apartment building that came to us. They wanted to sell the building, but they weren't getting the top dollar for the rents. So the sales side realized that, the brokerage side realized that, and our job was to get the highest maximum dollar we could for that seller. So we got Bob involved on the residential leasing side. We were able to get the rents up, take care of the property, give it sort of like a spit shine to make it more attractive and give it some curb appeal, get the numbers up. And then when that's done, then our marketing and the brokerage division gets back involved to sell the property.
If I can piggyback on that to end it, this property that he's speaking of, it was a 50% vacancy factor. So, and this woman had just lost her husband. So she didn't know what to do with the property. Right. And a lot of brokers just want to come in and sell the building and make their money and move on. Where in this situation, we told them, you don't need to sell yet. We need to raise rents. We need to do some renovations. We need to change around some of this the income and expenses, and then you'll get far greater amounts of dollars down the road.
Right.
And we were able to do that, and that's when we turned it over to the brokerage side, and we attained that goal for the client.
Mm-hmm. Well, we have about a minute left. I just wondered if you'd mention a little bit about how's business. Is it booming? Is it keeping you busy, or how do you look at it right now?
It depends who you ask, and what day of the week do you ask.
If you're asking me at this point in time, because interest rates are so low, as Pat mentioned in his conversation, the consulting side is inundated with the processing of these loans. It takes a long time to get done, but there are many, many clients that seek out professionals because, again, they don't have the time, the inclination, or the manpower to go through that, and that's something they like to delegate. So from our perspective, that's music to our ears.
Okay, well, then the answer, I guess, is that you're pretty busy.
Yes.
We're busy in all aspects.
The answer?
Yeah, it comes
good.
and goes, and it's up and down.
Terrific.
I was speaking to an environmental consultant yesterday, and they were going gangbusters, and environmental reports are needed for all the commercial deals that are done throughout the region. All the banks want them. So she's looking at it favorably that there's a lot of activity on the commercial side. The residential side is different. That's, revolves around the first-time home buyer, the pyramid all the way up to the multi-million-dollar buyer. It depends a lot on credit availability and good credit.
Yeah, and what division you're talking about in, in your business. Well, thank you for coming, Richard and Robert. I think we learned a lot about the commercial real estate business, and you gave us a lot of details, so that's great, and thank you for coming.
It was our pleasure.
Our pleasure to be here. Thank you very much.
Very nice to have you. And Pat, always good to have you.
Good to
and
be with you,
I know more now about the stock market than I did 15 minutes ago, so appreciate your comments. Now for our show next week, we have our guest as Carol Kivner, and Carol will be here talking about her company, which is Kivner not commercial, sorry about that, communication. She's going to teach me how to be more communicative. And so I would like you to be with us next week when Carol will be with us and teach us about some communication skills. So thanks for viewing, and remember, your money matters.